Hey folks, welcome to another Daily Market Report brought to you by Mike Bjork. Today is Tuesday and it is the 11th, October 11th. And hope you guys had a wonderful weekend. Hope you got, if those of you had a 3-day weekend for Columbus Day, hope you enjoyed yourselves. It was nice here in sunny California here. So not a lot on the news, economic news releases scheduled today. We just got the small business index. Previous month it was 88.1 and basically just had a slight uptick upwards a little bit. So they felt slightly better about the economy, but again, not the greatest. Still not great numbers here. So we're going to go ahead here to headline news because that's pretty much what we have today. And I'll give you a heads up, it's going to be all about Europe, basically. The stock market's a little mixed after a fantastic day yesterday, about up 300 basis points. Stock market was open, but the bond market wasn't. So that's why you didn't hear from me yesterday as the bond market was closed. And this is primarily for bond market as I try to support here. So we got the stock market close up yesterday, as we mentioned, over 300 closed up the Dow. And that was primarily because it was announced that France and Germany would basically pledge to provide total support for the EU to try to get out of this debt crisis, provide some type of solution, make sure that this remains intact. So that investors, of course, like that because you got the two largest European economies pledging their full support here. Now, also today we had the European Community President Barroso. Basically, he said he's going to unveil a plan to recapitalize the European banks tomorrow. So we'll see tomorrow. We might have some more news on that side of things. But Slovakia may throw a little wrench into this approval of the EFSF plan. So they of course need support, and they may not get the vote that they may need from Slovakia. So that's why you're seeing the stock market a little mixed there because they're wondering, okay, are we going to get this going forward? Because it seems like you get one foot forward moving forward, but you have to go backwards because something else pops up. So this is one variable that might kind of put a wrench into it. So we'll have to kind of see what they say here. So we're going to jump over to the bond market, see what interest rates are doing. We had a pretty big opening gap to the worst. So it was it opened up 25 basis points lower than where we left off on Friday. And right now we're up about 19, so we're in the process of closing that gap. But again, still we're on a downward trend. As you can see here, we have this downward trend. And the next stop gap really it probably would be right around the par 50 range. So we have room where we could probably hit that correction, a pretty big correction we were talking about. It's possible we could close some gaps that we created back in July, which I don't have a chart here for you. I'll show that maybe tomorrow. But most likely it'll probably be within this range. So this could be a good thing for long-term health. But if you're looking to refinance, I would definitely jump in now because we don't know when we'll come back to those rates. And if we got other variables like government may now some other plans that may help the stock market, but hurt the bond market, like what we saw last year with QE3 and QE2. I'm sorry, not QE3, QE2, and then QE1. QE1 was the greatest, so bonds didn't like it, and it jumped up. Interest rates jumped up about 1.5% as a result. So, all right, folks. So, the interest rates went up today again after going up about 0.5% last week. We went up again today. So I will catch with you guys tomorrow, but check out my little bribe here for you guys. We got a little thing going on here, so take a look at it. We got this webinar, first time home buyers, learn a little bit about the mortgage process, and check it out. Tell me, stop by CaliforniaMortgageTips.com/mortgage process. It's about 45 minutes. Learn about if you're a first-time home buyer, this is a great tool for you guys to learn. It's free, there's no obligation, and just pure content. We're not here to sell you anything. Just want to provide you good information. All right, folks, have a wonderful day.